Know the difference with Annex Wealth Management? Brandon Lehman, Director of Annex Private Client, as well as a wealth manager and a CFP at Annex. Welcome back.
Danny.
Annex Private Client, busy part of what we do at Annex. Before we get going, what's that elevator speech?
You know, when you think about it, there's Annex, right? There's Comprehensive Wealth, there's Annex Ignite. Well, Annex Private Client is a little bit more complex, right? It's for those folks that have reached that financial stage of their life where things have become complex from either an estate tax standpoint, just a regular tax standpoint, an investment standpoint, where there's a little bit more that has to be done, and frankly, a lot more. But you're looking at a team approach where it's, instead of meeting with the estate planning attorney maybe once every 3 years, this is an annual discussion with a lot of moving parts. So it's just a level of complexity, a level of net worth that really means there's more going on. So there's a little bit more that goes into it.
I'm sure what we're about to talk about plays into that space. And this is a conversation about NUA, what it is, how does it impact our clients who are business executives. Let's start by defining NUA.
NUA, net unrealized appreciation, is the opportunity for somebody who's worked for a publicly traded corporation where that corporation has allowed them to purchase stock inside their 401k, right? Inside their qualified retirement plan. And typically where we see this is folks who have a longevity at the firm, right? They maybe started at an entry-level job and have worked their way up, but the entire time have purchased stock. And as they've purchased that company stock, it's grown and it's grown and it's grown. And now all of a sudden you might have a large 401k, $2 million 401k, $1.5 million of it is your company's stock. Now what do you do?
That's a good news, bad news thing, right?
It's a great news. What do I do now type thing.
Tax planning runs through nearly everything we do on behalf of our clients. Section 402E4 of the IRS tax code plays a prominent role. I can see you nodding. You know what that is.
I do, and it's funny that you use that tax code because really it's net unrealized appreciation, and how do we handle it? IRS states, well, you can take this stock we just talked about out of your 401k and move it to a brokerage account or a non-retirement account, but there's some stipulations, and one of them is you have to pay tax on it. But this is a great opportunity to change how that stock is taxed, because if it stays in that 401k, that's taxed as income in the future. So you get out into retirement, well past retirement, and now you need to start taking it out. Well, you're going to pay income tax versus capital gains rates, which are different, and they're taxed differently. So that is where the IRS said, you know what, you've done a great job saving. Surprisingly, let's give you an opportunity here to be a little bit more tax efficient. Now, you got to do it right. And what I mean by that is their thresholds, or what we call them internally, are gates, right? You have to hit certain gates to be able to accomplish this and do it appropriately. If you don't hit those gates, or maybe you've done something that basically cancels out an opportunity for that gate, I use air quotes, then it can't be done. So working with a professional like us in Annex and the team we have here is so important, because we need to check first and foremost, have you met those gates, and have you not done anything to cancel out one of those gates?
These are people who obviously are pretty good at what they do, but this isn't maybe their thing.
Oh, these people are fantastic at what they do, right? They probably started entry level, which is traditionally what you see to have a really large NUA, not always. And they've made it to an executive level where they're really good at what they do, whether it's human resources, whether it's technology, whatever it is. But this is tax code, and they just don't know. It's no fault on their own, because the vast majority just don't know tax code. So you have to dive deep into the code, understand what it means, and then do it right. That's where the biggest issues come up, is people try and do it themselves or think they know what they're doing, and they do it wrong. Then all of a sudden there's a tax implication. And it could be a severe tax implication if it wasn't done appropriately, the gates weren't checked, or you didn't go through the proper procedures. And we at Annex have developed with our team basically a checklist, line by line by line, that has to be done in an order for us to get this taken care of.
How crucial is timing? Is there a small window?
That's where the gates come in, and I'm not going to go through each and every gate here, but timing is crucial. Age is crucial. All of it lines up and has an impact. Really, if you're in your mid-50s and you've left a job where you still have the stock, it's a great time to start talking about it, but we have to do it right. And that's the key. It just has to be done right.
Before we let you go, if you are a business executive in the audience and you'd like to know more about Annex Executive Program, that's part of your world as well, right?
That is. So it's working with executives, whether they're business owners or executives of publicly traded corporations. How can we help you be either incredibly efficient with the assets you have coming in, the wealth you've built, or if you're a business owner, how can we help offer the right opportunity for your senior leadership team that goes a little bit above and beyond just retirement savings?
Huge topic, tough to cover in 6 minutes. If we can help folks, head to our website. It's annexwealth.com. Brandon Lehman, Director of Annex Private Client, also a wealth manager and a CFP at Annex Wealth Management. Thanks for your time.
Thanks, Danny.